More than half of Americans are sitting on the sidelines. That's according to a new Bankrate survey. 52%, more than half of folks say they are not investing in the stock market, not at all. Meanwhile, today's bull market marches on, logging the fourth biggest winning streak in U.S. history. Let's bring in David Bach, Vice Chairman of Edelman Financial Services, and Dr. Gail Saltz, a psychiatrist. We need all the help we can get on this question, okay? That's my view on this. So, Gail, I want to start with you and set up the scene here for what people mentally have been going through. Because, let's face it, a lot of people lost a lot of money in the sell-off. Right. Many at the very time that they wanted to access that money close to retirement. What is going through your head as an investor when there's a market sell-off of that dimension?
Fear. And frankly, that's fear is a normal human response to a danger that has occurred or a threat that may occur. And when you've had a past trauma, you're going to have more fear and anxiety. That's also very normal. So let me interrupt for a second. So it's really a rational response. It's like if you put your hand on the stovetop, you don't do that again. Correct. Now, do you? But yes, it's rational. But then, it can become irrational.
How so?
Well, you can be faced with some reasonable prospects and fear that whatever trauma happened before will happen again to an irrational degree. So, paranoids have enemies. Anxious people there are real dangers. But then the question is, how hyperbole does it get?
How hyperbolic does it get, David? I know what you're going to say. You got to do the right thing, Gerri.
Well, what happens when markets turn down, people become fearful, and then they think it's going to be worse than it actually is. They think it's going to stay bad forever. The opposite when things get good, like right now. If you got out of the market at the bottom in 2009,
March
of 2009, you've missed 175% run up.
That's the Dow run up. The S&P is 143%. So big numbers.
So what's scary is now some of those people who got out, actually, they're getting in today.
Of course they are.
So this is when the greed part comes in. I was literally just with somebody a week ago who was bragging about getting out of the market in 2007 and telling me now they're getting back in. So I think the real key here is it's called investing for the long haul. We always say it on this show. It's about a diversified portfolio, building that portfolio over dollar cost averaging. Investors don't invest all at once. They invest every 2 weeks when they get a paycheck.
All right.
But some people can't invest over the long haul because they were already burned and now they're older people and they don't have a lifespan that has a long haul. And those are the people that are maybe reasonably more anxious. But I will say this.
You said something interesting in your notes, I thought, which is that when you get older,
yes,
you have a different attitude towards risk. How does it change?
You do get more conservative. In other words, young people, their brains, in fact, especially, young adults have this sort of, it's infinite, I'll live forever. And that's biologic. And so
although
they are able to be risk takers.
It's actually not what we're finding, though, with young people right now. What we're finding with young people is they're actually becoming conservative because they've seen their parents get hurt. Now, here's the key thing, though, for people
But also, what they told surveyors, is that they don't know enough. So there are people who say, I'm scared. There are people who say, I don't trust the system, which is also a concern. And then there are people who say, I'm not playing because I don't know anything.
That's a cultural phenomenon going on right now, right? We as a country have lost trust in a lot of systems. And that's new, institutions. And so, that's something this young generation is facing that the prior generations did not, that will affect their investment.
Here's really one of the key things. We're talking about older people. And when we say older people, it all depends on what older means, right? If you're over the age of 65 today and you're investing conservatively, meaning that you're seeing in cash, you're earning less than inflation, which means that your money is you're going to go broke safely. Someone who's 65 today has a 50% chance of living to be in their 90s. So the fact is, 65 is no longer old. I would actually say it's young. And what we're seeing is that there's a paradigm shift. There's a realization that people who are over the age of 55 actually need to be investing a little bit more aggressively than they had in the past because they're going to live
longer.
10, 15, 20 years longer.
I've got a question for you.
That is a function of age span being different. So midlife isn't the same and old age isn't the same. And so that does shift the conservatism paradigm.
So you've talked about middle-aged folks. I'll say middle-aged folks and older folks. Okay. But what about millennials? Millennials are telling surveyors, I don't know anything about that, so I'm not going to take the risk.
So let me just, I saw this survey, and I went in and I wanted to look at Employee Benefits Research Institute because they have the most data on retirement accounts. And here's what I found when I came to study for the segment today. What I found is that 65% of money in people under the age of 30, they're putting 65% of their money in the stock market. So this survey saying that young people aren't putting money in the stock market.
That's of the people who are investing.
That's right.
So what about the people who are not investing? What would you tell millennials who say, I don't know anything? It's probably true, right? They don't know that much.
Educate yourself.
First of all, it's absurd to say you don't know anything. We everywhere you turn, people say you have to pay yourself first. You need to use your 401k plan. It's about saving money automatically. What we're seeing young people do is use their retirement accounts, and the mistake that they're making, Gerri, is they're cashing them out.
Yes.
40% of young people are cashing out their 401k plans.
It's helicopter parents. A lot of kids are coming out not knowing anything because their childhood has been extended, because their parents have been doing everything for them, and they don't actually know, even though you could say they should. And the American dream no longer seems feasible, so they don't have a trust, a faith that they can just work hard, they can just learn the information, and then they can just get.
But they got to do it, Gail. I mean, the reality is it's on you.
Look,
it's on everybody.
Young people today buy the brand new iPhone. Okay, the moment the iPhone comes out, they know the iPhone. They're all lining up to buy the iWatch, right?
Right.
Then fine. And you know what? Then go buy Apple stock. Or buy an index fund that has Apple in it.
Sounds a lot like Charles Payne.
It's not that complicated. It just isn't that complicated. And here's the thing. I don't believe...
You can make mistakes when you're young, too. That's the other point.
Helicopter parenting, I'll talk about helicopter parenting for a minute. My father forced me to put money in an IRA account at 23. And, Dad, thank you.
Yeah.
Because you know what? Today I've got a very large IRA account because he forced me to save money at a young age.
I've got you guys going. Thank you. You guys are great together. Thank you so much.